Welcome back to the Meybohm New Homes Blueprints. We are here with the Tillery Park team today, Jaime and I, and we have a special guest as well. But before we get started with that, Jaime and I wanted to announce a little news. We have a little change in Tillery Park. What's going on, Jaime?
We have added a third site team member. We have added Bradley Sykes, and
Woohoo!
he is on board. He's a young,
Definitely a
go-getter, lots of fresh and new ideas. So we're excited to have him on board.
And yeah, and he's really starting to spin up some fresh ideas with social media, and he's got some unique takes on that. So it's been a fun addition to the team, and we hope all goes well with Bradley, and you know we'll continue to work with him. So exciting bit of news to start. So today we have Mr. John Mark Capers with Meybohm Mortgage, and today we're going to talk about VA loans. We're calling it VA loans, a modern thank you to service. There's so much about VA loans, so many advantages, so many myths, so many tips that we really kind of want to dive in, especially with Veterans Day around the corner. I believe it's next Tuesday. So I just kind of want to dive in and get going on that. So, you know, John Mark, if you want to get started, let's just start it simple. What is a VA loan?
Sure. And thank you all for having me today. So VA is a program that was started back in 1944 as part of the GI Bill. And it is actually a guarantee for veterans who have entitlement. They can finance 100% of a home, the price of the home, or the appraised value, whichever is lower. But they can use this program to get into a home without a down payment. The program typically has a little bit lower interest rate, competitive interest rate, compared to a conventional loan. Yeah, it's a great program. Not a whole lot of people know the ins and outs of it. In fact, a lot of veterans don't know much about it. So we're always trying to advocate for it and help people learn a little bit more about it, and so they can utilize it when they go to buy a home.
It's one thing that's been interesting to me in the business, in my 10 plus years in the business, is how often I run across someone who is a veteran who has a current house, but they didn't use a VA loan, and they don't even know that a VA loan exists and that they can use it. They're like, "Oh, I just served, 4 years," and I'm eligible, know, and that's what's interesting and neat for me when I discover those folks who don't even know that the benefit exists for them,
Yeah. Absolutely. And that kind of leads us into the next question.
Sure.
For everybody who would be available or eligible for this.
Yes. So anybody who has served a minimum of 90 days active duty would have entitlement. Technically, it's 181 days during peacetime. So I can't remember the last time we've officially declared war, but we're pretty much always
a little something going on.
So most veterans are going to be eligible after 90 days of active duty.
Okay.
If you're in the National Guard or reserves, that's going to be 6 years.
Okay.
So once you've served that time, you will be eligible. You have to apply for what we call a certificate of eligibility. Your lender can help you with that as well. But that will just help you find out how much entitlement you have and how much home you can buy with your entitlement without putting a down payment down.
Now would spouses be eligible as well for that?
So yes. So you can put a spouse on a VA loan with you. That's the only person that doesn't have entitlement that can go on a loan with a veteran. Surviving spouses can also qualify. So if you have a deceased veteran, their spouse can apply for a VA loan and use their entitlement as well.
I mean, that's such a tough situation for everybody. It's
Sure.
nice to know that program's there to kind of back those spouses of fallen service members. Mm-hmm. And just to clarify a little bit, we throw this term around a lot in our industry, but VA backed. What does that mean?
So what that means is that the VA doesn't actually underwrite your loan. They don't actually do the loan. The money doesn't come from the Veterans Department of Veteran Affairs. What it means is that they delegate underwriting to the lenders, but they back the loan. So it basically guarantees up 25% of the loan so that lender doesn't lose all this money if they loan out the mortgage to the veteran.
Right.
And they don't have to, there's less risk involved because the veteran's backing, the VA is backing. So, so when you go apply for a VA loan, your lender's going to underwrite the file. They're going to get all your documents from you. They're going to tell you how much you can qualify for. The VA is not involved in that. They are just there to make sure the lender knows that loan is guaranteed. So.
That makes perfect sense. And again, it's just such a great program. We're glad you're here to talk about it. I kind of want to move into what are the benefits of this. We touched on a little bit on what is a VA loan.
Sure.
But, there's a lot of misunderstanding about how these operate and what the true benefits are. So if you can kind of roll through those for us.
Yeah. So the biggest one obviously is no down payment. So you can finance up to 100% of the sales price. That is a big hurdle for a lot of home buyers. As a lender, we run into it all the time that someone has great credit, they have good income, they qualify, but they just don't have the money to put down on a down payment. So that is a big hurdle that helps them get into the home. There's also a competitive interest rate. So on average, about 0.5% lower on a VA loan than you would see on a standard conventional loan. So that also helps with savings on your monthly payment. You're paying a little bit less every month, and then over the life of the loan, you're saving thousands of dollars. So it's a big perk.
Tell us about the VA funding fee. We hear a lot about that. So what does that mean, and how does that apply to a veteran borrower on a day-to-day basis?
So VA funding fee, think of it this way. You've got a big pool of money that the VA uses to guarantee these loans. And they require each veteran to pay into that pool. And we call that a VA funding fee. If it's your first time buying a home with a VA loan, you're going to get charged 2.15% as part of your VA funding fee. You can pay that out of pocket as part of your closing costs, or you can roll it into the loan amount. That is the only closing cost that VA allows you to roll into the loan.
Okay.
So it can be financed, and it is your way of, as a veteran, to pay into this bigger pool of money that the VA uses to back these loans. If you've used a VA loan before, you would pay 3.3% currently as your funding fee. So there's a first-time use and a second-time use. There are veterans that are going to be exempt from the funding fee. So if you have, if you receive VA disability, then you would be exempt from paying that funding fee, and you would have no funding fee.
Wow. We get a lot of questions from some of our service members about, am I able to keep my first purchase as a rental and, use my VA eligibility again? I mean, how does that work?
Absolutely. So one of the biggest benefits of the VA program is that while you are supposed to be buying a primary residence with the VA loan, you can't buy an investment property. You can live in a home for a while and then purchase a new primary residence and keep the old VA loan on the original house and take out a second VA loan on the new house. You have to make sure you still have enough entitlement left over to qualify for the new house. But we call that bonus entitlement. So if you have full entitlement, you can go out and buy a home. There's actually technically no loan limit if you have full entitlement. So you can purchase a large house. You have full entitlement. Once you take out a loan, that entitlement stays with that property. So whatever property you purchase, that entitlement stays with that property. When you go buy another property, you have all that entitlement wrapped up in that original house. And so you have a little bit left over to use on the new house. So we as lenders will do a fun little calculation to find out how much you have left.
Right.
And you can use that to potentially put no money down on the new house. So you could technically have 2, 3, even 4 VA loans out there at the same time. A lot of veterans think that, oh, I have a VA loan already, I can't use it again. And that's just not true.
That makes perfect sense. One last question I think of on some of these benefits. is something that's really popped up in the market over the past few years is VA assumptions. A few years ago, we had VA rates down in the twos, and there's been a big kind of push to sell some of those. And I think without knowing the ins and outs, a lot of people have found that process a little disappointing. So walk us through how a VA assumption may work.
So if you have a listing with a assumable VA loan, you're going to want to reach out. You're going to want to reach out to the lender that's handling the original mortgage on that property. So everything goes through them. They hold the mortgage. Think of it this way. You're essentially taking the new buyer's name and popping it onto the original mortgage. Nothing else is changing about the loan. Now, one thing that you have to keep in mind is that the balance on that loan might be a little bit different than the purchase price of the home. That seller may have lived in the house for a little while, and they're going to be asking for more than what they bought it for, right? So one thing you have to keep in mind is that buyer is going to need to bring the difference of the original balance of the original loan and the purchase price. So you may have to have a little cash to bring to the table, but it is a great way for folks to get into a house with a very low mortgage and save some money on their monthly payment.
Absolutely. I mean, especially with today's rates, it's great to kind of stay in those low twos. I'm sure everybody would appreciate that. And that kind of brings up the next point. In today's market, I mean, rates have been higher than they have been in the last few years. They have come down a little bit recently, but how does this VA program kind of give you a competitive edge in this market as a home buyer?
So, people talk about VA taking a little bit longer. That's not true.
Right.
VA is just as quick as any other process. In fact, VA appraisers have a timeline they have to stick to. It's decided by local appraisers, but they typically will stick to about a 10-day turnaround time on appraisal. So it's no slower than any other process. You have a competitive interest rate right now. Actually, the national average, according to Mortgage News Daily, VA is at about 5.96%.
Wow.
So we're in the fives right now. And that is, again, a little bit lower than what you'll see on a conventional loan. It has flexible credit standards. So VA technically doesn't have a minimum credit score. Most lenders most lenders will come up with their minimum on that they're going to offer on VA. I would expect, similar to FHA, 580, 600, 620, somewhere in that range is where you'll probably see a minimum with most lenders. But they also allow a higher debt to income ratio. So on a conventional, you might be able to go up to about 45%. I've seen DTIs in the 60% on VA. So it gives you a little bit more purchasing power if you want to, have that high of a payment. But of course, it gives you a little bit more purchasing power, which is great. They have limits on closing costs and fees. So, you'll see a little bit lower closing costs in most cases.
Wow.
Bunch of different benefits to the VA program.
Well, I know Jaime and I were kind of talking before all this started, and as I alluded to earlier, there's so just many myths around all of this. So Jaime, why don't you let's run down some little Q&A myths and see what Mr. John Mark has to say.
Sure.
Well, one thing that I hear from a lot of seller clients when they are getting, Jen, we're in the days where we're getting multiple offers, right? And you get an FHA loan, a conventional loan, and a VA loan. A lot of times sellers would say, oh, well, I've always heard that VA loans, the appraisers are a little more strict. Talk to us a little bit about that.
Yeah, so that's not always the case. VA does have their specific guidelines that appraisers have to follow. There's also a pool of appraisers that are eligible to pick up an appraisal through the VA. So yes, there are some things to consider with a VA appraisal, but they're nothing
Nothing crazy.
It's nothing crazy like most sellers think. And in fact, if a VA or appraiser does note something on the appraisal, in a lot of cases, those things can be addressed by the lender, by the buyer, and potentially removed from the appraisal before they even become an issue.
Because isn't there an option for, if it's something the seller isn't willing to address, the VA borrower, if they want to, they can say, for instance, let's just say there's chipping paint around a window seal.
Sure.
And the seller doesn't want to do that. That's something that the borrower can pay to have done, correct?
Yeah, I mean, there's nothing stopping either side of the either party from doing anything. But there's also ways that you can have, certain repairs removed from the appraisal. So if the appraiser is requesting that something be fixed, the buyer can reach out to VA and ask that be removed.
Okay.
As long as it's not a safety
something
issue.
Crazy. Yeah.
That's the biggest thing, is that VA appraisers, they're looking for things that are going to keep the home safe for the veteran.
So what are some of the most common things that are flagged by a VA appraiser?
Handrails on steps, chip paint, roof issues, stuff like that. Anything that you see, it's probably going to be a safety issue, and they're just there to protect the buyer and the veteran.
I know with Helene, we're a year removed at this point, but limbs over roofs has always been a big one in my experience. Sure. Just again, protecting the veteran.
And it's one thing too, I think as an agent, when you're listing a property, also, if it's a home that needs a lot of work, I guess if you're listing a property or potentially taking buyer clients to see a home that needs a lot of work in their VA, they're going to be using a VA loan. That's part of the responsibility as agents to help guide your seller clients. Hey, if you want to open up the possibility for more potential buyers, you might want to trim those limbs that are hanging over, because it's something that's going to come up in the loan.
Yeah.
Or, I don't know if this is still a big issue, but I remember a few years ago, if there was carpet that had a wrinkle in it, that's a potential tripping hazard. So it doesn't take much to get that carpet stretched, and then you're opening up your buyer pool to a lot more people, because in our area, we have Fort Gordon here. We have such a huge population of veterans. So it's really, if you are listing a house and you have that mindset of, oh, I'm not, I don't want to be open to veteran borrowers because I've heard that it takes longer, or they're not as a strong buyer as, say, conventional loan buyer, then you're really doing yourself a disservice as a seller.
Absolutely.
But on the flip side, if you're representing a buyer client as you're touring homes, you want to make sure that it is something that could actually use, a VA loan could be used, and it's not something that's a huge fixer-upper. Houses that need a lot of work are probably not going to go VA, I would assume.
Absolutely. And I think we really need to get that stigma of VA loans being less strong, just out of the market, out of your head. When I was coming up, you would hear, oh, well, they're 0% down. If they're not putting any money down, they don't need cash reserves. That's absolutely not true. A lot of these veterans and active service members are just smart and savvy with their money. And if they can do a 0% down loan and it makes sense, why are they spending their cash reserves?
And even if they're not, I mean, there's a lot of times that people come along and they have money to put down.
Absolutely.
And I still encourage them to do VA because, there's no mortgage insurance. There's a competitive interest rate. So even if you're putting money down, VA could be your best option.
Right.
Absolutely. I agree. And kind of wrapping all this up, I know we've talked about, some possible VA loan incentives that might be coming from Meybohm Mortgage to kind of help out in Tillery Park.
Yeah, absolutely. So we've been doing 1% of your loan amount as a lender credit out in Tillery. And in the month of November, we're also going to be throwing in a free appraisal for veterans.
Wow,
So,
free
Oh,
appraisal.
great. That's
Yeah.
awesome.
So if you apply with us in the month of November, we will waive your appraisal fee. That'll save you about $650 on your closing costs.
Wow.
And that is on top of what you'll be getting as a lender credit, as well as any incentives from the builder.
And that's a great time to remind everybody we're still offering $10,000 towards incentives for any of our first choice and all weathers construction homes. So, we can kind of partner with John Mark here and really kind of help everybody out with these benefits. So
it's important.
So really someone between the 10,000, depending on your price point of the home, $10,000 plus your 1% plus the waiving of the appraisal fee. Someone could get, really, they could buy a brand new construction home, with no money out of pocket, right?
It could cover all of your closing costs if you want to use it for that.
Yeah.
You could also use it to lower your interest rate.
Okay.
These days, because interest rates are a little bit higher, people have been doing what we call buying down the rate, buying discount points. So you can not only use those credits to cover your closing costs, you can also use them to get a little bit lower interest rate if you want.
Wow.
And if you do that, that'll help you save money on your monthly payment.
That's great.
Absolutely. Well, it's such a great program. And John Mark, we really thank you for your time, for coming in and kind of walking us through the ins and outs of this. And anything you want to leave, any closing remarks on VA loans for everybody?
No, just thank you guys to all who have served and are serving. Thank you so much.
Absolutely.
We would love to give back to you guys a little bit, waiving your appraisal in the month of November.
Sounds good.
All right.
Thank you so much, John Mark.
Thanks, guys.
And we'll see you next time.